Anand Tandon is also joining us on the discussion. Anand, you may have heard my colleague's report, which he filed at this budget too. There's a lot of stuff coming in out there. How do you see the power sector from the market standpoint? Because while so much is happening, market usually tend to kind of move ahead of itself and factors a lot of things, in present terms already. Has that happened here in power sector, or you see more juice here?
Well, there are two ways of looking at it. One is from the demand point of view. Clearly, demand is going to keep on going up. We had a period about 4 5 years ago where there was some subdued demand coming through, and there were overcapacities in terms of generation. That is now behind us by a wide margin. In fact, there is need for further investment in that sector. To that extent, we have seen some revival in terms of announcements of new plants coming through, especially thermal power plants, because of the fact that renewable is not enough for you to be able to continue to grow to meet the demand that is likely to come through. In terms of the pricing of power, that is where the challenge is, and no matter whatever the government has done so far, it has not been enough for the simple reason that the political exigencies of having to give away free power is so much, and despite having the requirement that they should be funded by the state government's budgets, it just doesn't happen. So almost all the or a large number of distribution companies continue to remain, terribly cash strapped, and that affects the entire payment cycle. The new plan that you are talking about will help to some extent in terms of ensuring that there will be some notional connectivity to all the remaining households, which should not have been there in the first place, but even then, and therefore to that extent, some amount of equipment will likely get sold. But in terms of the actual demand, unless you again provide them power for free, it can be like the Ujjwala Yojana, where you may have provided them gas cookers, but the gas prices are so much that many of these households are not in a position to use it. Net, from a stock market perspective, I don't see a major upside from any of this, other than the fact that the market is in euphoric territory, so all news is good news.
Coming in on the power sector, Harry Dole also joins us on the show. He's of course been a big watcher of the entire power sector, and currently he's the Director General of Independent Power Producers of India Association. Harry, hi, good to be speaking with you. What do you make of this big announcement? If it does happen in the budget, they are talking about electrifying leftover households, could be a financial assistance of around 2,500 to 3,000 odd crores. Which to your mind are the key beneficiaries of this, and what exactly is the ask of the power sector from this union budget?
Well, I think it's extremely good and important to understand that everybody in this country has a right to access power for their safety, security, for various other requirements of living. I think power has become a lifeline for people, whether they are in rural or urban environments and so on. This is a good scheme. It's a good step forward, but I think it's a very small step. And I think in times to come, listening to your previous speaker, I think what's going to happen is that all these guys are going to become surplus and will not be customers of the distribution companies, because they'll all turn to solar and other renewable energy sources, either on their rooftop or on their balconies or wherever. And that's where the government should subsidize and finance, if I may say so, the DISCOMs, to make sure that these consumers are off-grid but are 100% connected to the grid by way of renewable energy. That's the first point. The second point is this whole beaten track that distribution companies don't have enough money because of political consideration. This is a very old story. I've been hearing it for about 25 years now. But I think this will pass now with the use of technology and the use of the new efficient renewable energy options available, where you are going to get a revolution happening, technologically speaking, where people will become independent of the grid. So I think this whole concept of the grid weighing down on the power sector, I think will be something of the past, and I hope it happens soon. Last point, demand calculations just in the state of Karnataka. Last year, we had a 10,000 megawatt demand, and it shot up to almost 18,000 within 1 year, an 80% increase. That means there is a lot of suppressed demand right now, which is not coming up, and therefore there's a huge upside for the power sector in the years to come, both on the supply, equipment, and whatever side you want to call it. as far as the power sector is concerned. I'm very, very positive about it, and I think it's a damn good step the government has taken. Although it looks like a small step, but it's important that everybody has access to power.
Right. All right, Harry. Thanks very much for joining us on the show today. Let's go across to my colleague Ansh now to talk about which are the biggest movers, volume buzzers of the day. Ansh?
Right, so Oracle Financial will be the first stock in focus for today's session, as the stock has given a breakout from its 10-session consolidation pattern. In addition to that, the stock has also touched record high level, and the breakout is backed by heavy volume of around 3 times its average trading volume of last 10 sessions. Apart from this, Persistent will also be in focus, as the stock has surpassed about its key pivot high of around 4,450 level, touching record high level, and the stock has also registered its biggest single session gain in over a year. Also, the breakout, the surpassing, has been backed by good volume of over 2 times its average trading volume of last 10 sessions. Lastly, REC will be in focus, as the stock has given a breakout from its 14-session consolidation pattern, hitting 4-week high with good volume of around 40% of its 10-session average volume. So keep an eye on the stocks.
Some big price volume buzzers right now. But Anand, what's the view on PVR? It's become one of those stocks which is just clearly associated with one movie release versus another, because other than that, we haven't seen a big pipeline. Today, of course, the stock is reacting to Kalki's numbers, and we'll run those for you on the screen. But what's the take on the stock?
Well, clearly it depends on the content that is available, and the content pipeline right now looks fairly decent, because if you look at the number of launches that are lined up for the next few quarters, it does appear this year may be a little better than what we've seen in the recent past. More importantly, even the Western movies which were out of fashion or were not being produced last year because of a strike in Hollywood are likely to come back again this year. So to that extent, again, you will have a better pipeline. Good pipeline means greater possibility of some hits, and obviously, you know, the local F&B as well picks up if people actually come into the cinema. So generally, I think from a tactical perspective, this would be a place where, you know, from here on, the business outlook for PVR should be significantly better, at least for the next 12 months. But each month has to be watched separately, because it all depends on the content that's coming in and how the audiences react to it.
Sandeep, Anand, where exactly are you finding value in this market? How are you approaching your portfolio? I mean, have you raised some cash lately, or are you running positions which you made early entry into but not buying anything new?
So there is no value in the market. Let us be clear on it. We are in a momentum market, and therefore you have to really see where is the growth possibility which will allow you to catch up with value, even assuming that in the best case the stocks don't fall. And therefore you are looking for stocks which have a more or less defined growth trajectory, which brings you to many of the cyclicals actually, because it would appear to me that, you know, for example, one of the key themes was last year most of the commodity prices were down. That is now have been played out, and from here on you would expect to see commodity prices rise all over again, especially energy. And therefore, you know, things like oil and we've already seen that happen with many of the softer commodities, the agro commodities, and as well as the some of the, as I said, energy and so on. So I think you will find that many of those industries which are dependent on that will actually do reasonably well. Margins, obviously, for many of the consumers will be under pressure, and therefore that's an issue. You are really searching for places where there is going to be greater government action, where you are sure that there will be spend going through, and therefore companies can benefit. And from that perspective, again, if you see the kind of stocks that are moving up, they are pretty much, again, kind of anchored towards government expenditure, whether it is rural demand, whether it is infrastructure, or whether it is capex-oriented companies. There are very few sectors which have genuine upside potential without and being significantly cheap. For example, the run that we are seeing today in things like IT are more out of hope than out of any strategy. But the places where there are significant changes in regulations, for example, you know, today the fact that over the period that SEBI has now decided that they will allow easier delisting of holding companies, I would argue that, you know, holding companies discount may likely be occurring, and therefore may narrow, and therefore, you know, you might want to look at holding companies as part of your portfolio, at least in a small way. Don't go overboard on it simply because there is no immediate trigger for any of the companies to do anything. But the fact that you are buying it at a discount and there is now a regulation which allows them to delist or to move out with less of a discount gives you some potential of downside protection. So it's pretty much tactical and trying to figure out wherever you think there is less chances of volatility downwards and greater chance of at least a stable earnings going forward.
Taken. So that's the view coming in. There's no value on the table right now. It's all about momentum, and the momentum right now is on the upside, 24,150. In the last 2 minutes, some of these PSUs have actually moved up. BAML, HAL, BHEL. These are some of the names which in the last 2 minutes, even BDL for that matter. So some of these defense names are on the rise. Take a look at those big upswings which are happening across the board. So I'm talking about Bharat Dynamics, Hindustan Aeronautics, you have Bharat Electronics, you also have BHEL, Bharat Heavy Electronics. So all of these names are something which are actually in focus right now and perking up. But separately, I also wanted to put the spotlight on the stocks and news, and let's pull up some of those names which are actually buzzing around. On brokerage action, L&T is up 5%. UBS initiated coverage on that counter with a buy rating and a target price of 230. That will come up for you on the screen. Wipro is the other one that we have been highlighting, up 3% after CLSA double upgraded the stock to an outperform from an underperform earlier. JB Pharma is in focus on account of that Kotak security initiation happening. Target price above that 2,000 rupee mark. Garden Reach is locked in upper circuit. That $21 million order, which is just 175 crore. That's only the trigger point, but that stock is definitely locked in upper circuit. You have updates coming in on REC, IREDA in terms of the Q1 updates. REC, the loan sanctioned is up 27%, and for IREDA, that loan sanctioned amount is up 3x on a year-on-year basis. Of course, we spoke with the management of IREDA as well, and we'll quickly play out a soundbite as to what's happening in that business, because the management was fairly confident that they're on their growth path and they are working to cut down their asset quality issues as well. Listen into a slice of the conversation we had with the management of IREDA earlier in the day.
We are expecting that probably now that is in advanced stage, and they will take a final call on this. Along with us, also I came to know Utco had also submitted their request. If we get, so in addition to PFC, REC will be another 2 agencies. So we can go to market and we can raise from the market, assuming if it is 5.25 or even 5.5. Today we are raising from the market at 7.5, 7.4, something like that, because 1 week back we raised around 1,500 crore for 10 years, and it was 7.42. So against that, if it is 5.2, so almost 150 to 200 bips difference will be there. And if we pass on that to the sector, remember one thing: the new and emerging sector, the challenges are more. So when challenges are more, we load that risk factor to the interest. So many projects which are not becoming bankable today because of that loading, if we have a cheaper source of borrowing, then that much can be passed on to the sector, and the project which are not becoming bankable today, those will become bankable. And that will further speed up this 500 gigawatt target in the country.
Anand, any part of the PSU pack where you see value, or bulk of the stories are already in the price?
I think of them and I look at sectors from a traditional, which industry are they operating in. It just happens that some of those are more dominant where government is more dominant and somewhere they are not. So clearly in India, defense is largely dominated by the PSUs because of historical factors. And though that is changing, it is a very slow change and is likely to remain slow for some time. So, for example, defense, we want to continue to be there. Absolutely. Would you think that, there is, are you going to make dramatic money from here on? Maybe not, but at least you are sure that the amount of spend is not going to drop off. More importantly, because we have started exporting, there is a greater chance that you will have a little bit of diversity in terms of being able to sell, even if India itself is not purchasing that particular platform. So that's certainly a place. Again, as I mentioned, energy, I think I'm quite bullish actually on what the outlook for oil is likely to be. And therefore, obviously upstream exploration companies would have been a good place. But unfortunately in India, because of the fact that we have a windfall tax that is imposed on the upstream companies, that prevents them from actually passing on the benefits to shareholders. So while there is a space there, it is not easy for you to access it if you're looking at only Indian investments. For the rest of the sectors, unless there is a monopoly, government doesn't do very well, right? I mean, we are clear that in any place where the government is actually competing with other players, they make a mess of things. And that is likely to continue. So I think you have to be very selective about where you want to be vis-a-vis the government ownership, simply because of the fact that it is public ownership, which means it is owned by nobody.
That was quite brutal actually if you heard that answer. But that's Anand for you. He always gives it.
Calling a spade,
Clearly.
right? So that's the situation of the Indian defense sector, and a lot of public sector entities are not shying away from calling that. But in the meantime, let me take the BTSC ideas from our technical experts. Naresh, what's on the buy today, sell tomorrow list? Okay, we'll take that, those recommendations up on the screen. So Bajaj Finance was one of the recommendation that Naresh has, and let's see if there is any other, because he's recommending a target of 7,400 there. The other one is ACC, where he has a buy stance with a target of around 2,770. Kunal, what about you? What are your recommendations on the BTSC trades?
Tata Motors is something which I think has confirmed a breakout about the 1,000 mark today. So would suggest a buy with a target of 1,040 and stop loss at 980. And ITC apparently is also another name which is making a comeback. It's still trading below its long-term averages, but the volume patterns, the intraday indicators suggest that this could be a start of a potential breakout move for ITC. So would suggest a buy with a target of 460, stop loss at 415.
In the last few minutes, MGL has finally got locked in the upper circuit now. So it's 10% as far as the cash market is concerned. You also have up move on Policy Bazaar in the last few minutes. Let's pull up that one, and 361. That stock has been on an amazing tear on the last 7 to 10 days. Naresh, if you're back with us, a view on Policy Bazaar as well as 361.
So PV Fintech has been the first one of the block in the whole new age space. The trend continues to be strong. Even today, the stock has given a fresh breakout, and more interestingly, it's crossed the IPO highs, which is where it was listed around that 1400, 1450 mark. So still a very positive chart here. 361 in the short term could take a pause. It spiked from those 850 levels just a few days back to almost 950 to 1050 zones. So expecting a pause over there as such.
I mean that 361. There is a slew of some new joinees out there, which is keeping
very marquee new joinees that all of us watch out for. So
does it impact the business? Yes,
no, of course, it doesn't impact the business, I think, on a day-to-day basis. But I think that's just one of the trigger points that we are talking about. It's not the kind of business where that leadership matters as a banking name, like SBI is getting a change.
And guess also what? I mean, he's joining as a
advisory role,
an allocator, right?
Yeah.
But 361 is all about collection, because they have some 3,000, 5,000 biggest HNIs of our country as their clients, and the collection and the kind of flows they have is amazing. Anand, any of these market sensitive kind of names which you like, either the distributors or asset managers, even some of the platform companies, K Fintech or CAMS, etc., anything out there which you like for the long term?
I think that business segment is fairly interesting. Clearly, as India goes more towards from savers to investors, you will have more money coming into that place. The only problem is that this is a cyclical business, much as we may want to ignore the fact that there has been no cyclicality over the last decade or so, and therefore think of it as a secular growth. The reality is that people come into the market in droves and they go out in droves, and for a long period of time, you may find that there is nobody there. Now, the question is whether that has permanently turned. I don't believe anything is permanently changed. Consequently, I would be worried at buying at the top of the cycle. So, will you continue to see growth? Yes. Will you continue to see money being made from the market from these companies? Not necessarily, because they don't really have too many modes where, if you are distributors, etc., where you can really add too much value. The asset managers are a very interesting place, but again, the same challenge that they are extremely expensive. You only have to look at what asset managers trade at globally to see that Indian asset managers are growing perhaps maybe a little marginally better, but otherwise growing at the same rate as international players and trading at 3 or 4 times the valuation of the international players. The places, therefore, that I would be more sanguine about investing continues to remain boring places like banks and insurance companies. Insurance, because once you're locked in for life or almost for life. Banks, because you have no option but to deal with them, even though they may be very usurious. Therefore, net, those are the more safer places where, despite whatever quality of service you get from any of them, you may continue to have to deal with them, and that makes for a very good investment.
Positive on insurance and banking names, but nonetheless do like some of these broking and the stock market ancillaries as well. But talking about stock market ancillaries, names like CAMS and K-Fintech have been in focus and on investor radars. We did speak with the managements to understand the way forward. Listen into a bite of that conversation.
Blended at company level, EBITDA margins are at about 45% now. And historically, if you see the last 4 years, they've grown by about 1% every year. Our expectation is that that growth, that margin expansion in the EBITDA line of about 1% every year will continue for the next 3 to 4 years. There's a strong possibility. It is aided by the core business, which continues to scale. It is also aided by revenue build out in the non-MF businesses, where we are kind of ending the cycle where we were investing in platforms. So the platforms are built, and now whatever cost it takes to build out the go-to-market, that will continue. But we expect non-MF, revenue contribution, like I said, to be in the range of 30% annually. For overall margins at company level to expand by about 1% on the EBITDA line every year for the next 2 to 3 years. On a longer scale, on a 3 to 4 year scale, we expect to be growing revenue about 15 to 16% in a sustained manner. Of course, market tailwinds and a lot that happens in the capital markets will continue to impinge upon how we grow. But at a broad level, you could think of a 15 to 16% revenue growth in the next 4 years.
There is the opportunity, and hence, we should always chase it. We should always be in an addressable market, which is quite substantial. But at the same time, one of the other reasons why we venture into global is to de-risk. Now, as a professional entity, it is our duty and responsibility to de-risk. Now, we always believed and continue to believe that mutual funds and India is a phenomenal story for the next bunch of decades. That said, this is financial services industry nevertheless, and we will always hit the cyclicalities associated with that. There can be market turbulence which can impact businesses like us. So for us, it's a huge amount of risk mitigation strategy as well as we cut across multiple other asset classes and into multiple geographies. We have, in 2018, acquired the transfer agency arm of fund administrator in Malaysia, and that is how the sojourn of international business started. And with that acquisition, we got 2 clients and negligible amount of revenue. From that, today, we scale it up to roughly about 10% of my total revenue pool, which is almost $10 million of revenue comes from my international business today, right? And this had been growing, obviously on a 5-year basis, 0 to $10 million. It is not percentages. You're really talking about growing in multiples, and that is how a young business such as this should. The addressable market of Asia, where we are currently present, is roughly about $9 trillion, of which major chunk is in Singapore. The rest of all markets together is probably about $1 trillion. We have just taken baby steps to start Singapore. We have created a first office platform called Exalt, and we're moving to Singapore soon enough.
Okay, so
if you like this video, then like, share and subscribe to ET Now.